Welcome back to another episode. Today we are going to take a quick look at two software stocks that have taken quite a beating after earnings. The first stock we're going to take a quick look at is Autodesk, and we can see the stock price after earnings took a nice dive. It's down over 8% right now. The second stock we're going to take a quick look at is Zoom Videos. This one took a bigger hit, about 14.16%. right now since reporting earnings. So in today's episode, I want to take a quick look. Hey, Jose, are there any major changes in fundamentals and why these stock prices have dropped? If not, are they giving us any type of buying opportunities? If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and let's get started. So let's start off actually with Zoom. I've done a video on Zoom a little bit before, but right now I really want to dig into pretty much their fundamentals. And first, let's start off with what we see the overall growth in Zoom. Where are investors excited about Zoom? So they just reported their earnings, and one of the biggest growth is they're growing overall in the 1 million plus annual reoccurring customers. So these are customers that pay more than $1 million a year on revenue for Zoom, and that grew 77% compared to same time last year. They're saying that they're seeing a huge increase in traction in the APAC region. And the second thing is they're also seeing strong performance in their Zoom Phone and their Zoom Rooms. So here they go ahead and show that the Zoom Phone acceleration is growing like crazy. 100 customers with over $100,000 in their Zoom Phone annual recurring revenue. So this is any products that have to do with the Zoom Phone kind of business. That has grown 241% compared to the same time last year. They've also increased. They have over 21 customers right now with $1 million in Zoom Phone revenue. So this is where pretty much the huge growth is coming for the company. And this is what investors seem to be very excited about. And later on, we are going to take a look at things like price to sales ratio. We're also going to take a quick look at charts to see how fundamentals and technicals kind of meet up. Let's take a quick listen to today's sponsor, guys. A great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So now let's take a quick look at actual revenue growth from Zoom. So here we can see revenue and cost of revenue. Revenue for this company has increased dramatically trailing 12 months. If we take a look, this most recent quarter was a growth of 53.95% for Zoom compared to same time last year. And I do believe this, if we take a quick look at this chart, this is why things are looking a bit scary in forms of for the company. In previous quarters, revenue was growing at triple digits compared to the same time last year. But this was one of the first few quarters in the past 5 to 6 quarters where revenue did not grow at that triple digit rate. So this slowdown is kind of happening. At the same time, we have to remember, same time last year, COVID was happening, a lot of working from home. But this is still growing at impressive levels. The other thing, if we take a look at revenue growth sequentially, revenue growth only grew about 6.82% compared to last quarter. And I do think for software companies, especially one providing services, that sequential growth is something you want to see. And this is the lowest it's been, but it has been decreasing over time. I do want to take a quick look at some of the good things, right? Gross margins are still pretty high. Even after having kind of that hardware stuff with like Zoom Phones and all the other products, gross margins are still about 71% for Zoom, and profit margins are 27.6% if I take a look at trailing 12 months. So overall, this is definitely a company that makes good gross margins and is improving their profit margins as well. Another thing I do like about Zoom, we talked about some of that negativity, right? Some of that slowness in growth. But like I said, continue to see both sides. This company has very strong balance sheet. plenty of current investments in cash right now, over close to $5 billion in cash, and only about, I want to say, less than $100 million in non-current debt. So plenty of cash available. Most of his liabilities are actually deferred revenue. So this is something that I really don't consider liabilities myself. And if we take a quick look at operating cash flow margins for Zoom, they continue to be pretty high, sitting at around 49.82% when taking a look at trailing 12 months. They are decreasing a bit, but overall, this company keeps a good portion of its cash. Later on, we are going to take a quick look at some technicals and also some valuation metrics to see, even though we saw the good, the bad, is the price right now? Now we're gonna take a quick look at Autodesk. This is traded under the ticker as ADSK, right now sitting at $288.75. I am gonna explain a little bit more about Autodesk. I feel like people are more familiar with Zoom than Autodesk, but we can see since earnings, this stock price has dropped about 8.2%, so it's definitely taken quite a beating. But if we take a look from its 52-week high, the stock is down about 15.64%. So it's definitely seen better days. It currently has a market cap of $63.53 billion. For those not familiar with Autodesk, they are also another software company, I would say. And here they provide softwares that are hitting the three main markets: architecture, engineering, and construction. So let's say you are in any of those firms and you're trying to work on a project to develop some form of skyscraper, to develop some form of bridge, something. You're using their 3D modeling software to kind of make that happen before going through the building process. They're also used in stuff in engineering for like electrical engineering and product. Then you have the product design and manufacturing. Now, let's say you work in a business where you're designing some form of new product, you're designing something else, you're going to use Autodesk. The final market that they're really hitting is the media and entertainment. If you're creating some form of animation, cartoon, movie, if you're doing some form of 3D modeling needed for example, the video game industry, you're most likely using one of Autodesk products. So very, very impressive market, I want to say, and products. If we take a look at their most recent earnings, their biggest market is the architecture, engineering, construction. This makes up a little bit less than a little bit less than 50% of its total revenue, but that is up 21% year over year. The other one that's also up, all of them, right? All these segments are up a nice double digits, and they're hitting pretty much everywhere. The APAC region is up 21% year over year. The Americas is up 14% year over year, and the EME and Europe, Middle East, and Africa regions are up 16%. So we can see overall growth in all their markets and overall growth in all the sectors they hit. If we take a quick look at revenue growth, we can see this is a company, year-to-year growth has grown over 10% for the past 2 years or so. The most recent revenue growth was 16.06%. Sequentially, on average, we can see they do grow every quarter. There are a few quarters where the revenue do decline compared to previous quarters, but we can see here in the past 2 years worth of quarters, a little bit more revenue growth has increased. Now, if we take a look at profit margins and gross margins, this is another one with very strong gross margins. This is a software company, so gross margins are 90.8%. Pretty impressive. Profit margins have improved over time and now are sitting as high as 32.5% when taking a look at trailing 12 months. So overall, very, very strong. Very similar, right? Strong gross margins like Zoom. I want to say Zoom probably did have a better balance sheet than Autodesk, but Autodesk balance sheet is not half bad. Most of their liabilities, very similar, is deferred revenue. They have about $2 billion in non-current debt. They have, I want to say, about $1 billion, $923 million in cash. So roughly $900 million worth of cash. At the same time, this is a company that has been profitable for numerous quarters already. So it's okay for me to see them a bit leveraged, and a good portion of their liabilities is deferred revenue. If we take a look at operating cash flow margins at trailing 12 months, they are also pretty high, around 38.5% to be exact. Not as high as Zoom's, but still very, very impressive. So fundamentally, all these companies, especially for Autodesk, right? I want to say not much has changed fundamentally for Autodesk that I can see from fundamentals For Zoom though, we did see a bit of a slowdown in that revenue growth, causing that stock price to drop a nice amount. In Autodesk, I want to say I don't see much. Now I want to take a quick look at price to sales ratio. Autodesk price to sales ratio is about 12.2 right now, not sitting at crazy levels. I want to say compared to its peak of around 17, I think it's a great values right now. Properly valued, I want to say, is probably the best word. It's not overly priced, it's not overly cheap at the moment. I want to say with Zoom Video, we did see that slowdown in revenue growth, but Zoom did have a little bit higher growth in forms of revenue. It also had higher cash flow margins compared to Autodesk, so it is a little bit more expensive in price to sales ratio. I do want to say a good portion of the risk has been eliminated, now sitting at 18.68 at forward price to sales ratio for Zoom. Still a bit high, but definitely I want to say a little bit more attractive than it was before. The final thing I want to take a quick look at are technicals. So if we see Zoom right now in forms of technicals, I want to say is sitting at a nice support level, very similar to what we're seeing with valuation metrics. A good portion of the risk has been eliminated. Obviously, stock prices can continue to be volatile, so this can go much lower than where it's at right now. But I do believe in percentage-wise, Zoom has lost a good portion of risk. Autodesk, very similar, right? Sitting at good, I want to say a good volume areas with its moving averages right now. I am liking Autodesk at these levels right now. I don't have Autodesk in my portfolio, but I do want to add it to my watch list and maybe incoming portfolio buy. Autodesk is looking pretty impressive. So right now in both companies, let's say I was bullish in all of them and want to increase my overall exposure in either Autodesk or Zoom. At these levels would be where I would buy. Definitely, I want to say some form of base level, not a small position, but not a super big position, because I want to say both of them are sitting at great values. Nothing too cheap, but nothing too expensive. Something to kind of build up that base. So I hope you guys enjoyed today's video. Take care, have a good day, and see you next time.